Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Shakti Pumps. Can this become a very big company later on, or should you avoid it? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Shakti Pumps, a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from now and then on different market segments, sectors, as well as stocks. For detailed market talk or company analysis or number of stocks you want to talk to me about, you can directly email me and we can work things out. Now, what the company Shakti Pumps was established in 1982, and they provide pumps and motor farms for farms and irrigation. Top brand in this segment currently, and top management, strong pedigree. It is a niche player in the India agri segment, and the market cap of the stock is only 400 crores. So, a small cap company in this segment that we were looking for. If you look at the numbers, so sales declined by around 11.5%, and you should notice that during the pandemic also, rural income did not fall a lot. So agricultural products and agri-based stocks really did well, even though there was pandemic all around India. So considering that the numbers are not that great with the drop in sales of around 11-12%, profit grew by around 50%, which is a very good sign. There's a high interest burden, and that is a real drawback for the company. Return on equity is in negative, operating profit margin is only 3%, and this is what I probably do not like about the company, that the margins are not that great compared to other companies in other sectors. If you look at the performance of the stock is down around 77% in the last 2.5 years. Numbers have declined sharply from better numbers in 2015-16, and it has been declining. And from FY19 onwards, the numbers have declined very quickly and has virtually nosedived. It has been struggling on all fronts in terms of numbers. The results have been ordinary, although, as I explained, the rural theme has been in focus and has been doing well. So, lately the stock has gone up over the last few days or sessions, but overall the stock has not performed that greatly, and it is justifiably so because the numbers have not been that great. So, the corporate performance have not been such that the stock would be rewarded by high rises. Promoter holding has increased over time, and which is a positive sign. Why I would say it is an avoid. Company has underperformed in a favorable sector. So when you consider other companies in the tractor segment, in other equipment segment, and you can say pesticides or insecticides and other chemical segments in this agricultural theme, they have done appreciably well. You look at a Bayer Crop Science, etc., you look at Escorts, etc., and so on and so forth. But for some reason or the other, Shakti Pumps has lagged, and it is not just that the stock has lagged and the valuations are attractive, it is the numbers as well which has not been that great, and hence I would not like to get in even after the up move that has taken place over the last few days. Return ratios, as I explained, are not that great. So you look at a negative return on equity, just a single digit, you can say, operating profit margin. That doesn't augur well for investors who want to invest and churn out 14-15% annually. These stocks can do well for a period and then can go down a lot, so you need to consider that as well. Debt has increased a lot over time, so over the last 2-3 years they have taken up a lot of debt, and that is also a big red flag for me while investing into any company. And there are other options available in the rural theme, and that is the biggest reason why I would not like to get into such stocks. So larger companies, better companies, which look like will perform better over 3 4 year time frame with the agricultural, you can say, reform. Those companies are set to do much better than these small cap companies in the agricultural space. So why not just go by those larger companies and have a sound sleep, rather than buying into small or micro cap companies and worry about what will happen the next day or how will the stock will perform. So that's why I would prefer those compared to a Shakti Pumps. Currently expensive on basis of results, so the results have not been that great. First, let the results come out, let the numbers come out a big time, and let the numbers be good, and then we'll look at how we'll treat the stock, even if it goes up 20 30% from here. So we could see that the sales may dip further once the December quarter and March quarter come in. Probably after that, sales will increase. So there is a seasonal effect also for these agricultural companies. Once monsoon subsides and winter sets in, probably the sales will not be as much as we have seen already in this year. So what needs to be done? In my opinion, it is an avoid at all cost. Even on this up move, I won't like to buy. Although you can keep a stop loss at 200 DMA, that would be my suggestion. But these rises and these moves in the markets, that 12,000, 12,100 on the Nifty, are very good opportunities to probably shift your portfolio or turn your portfolio into other very good quality companies on declines. So any rise can be used to probably sell into the stock. Look at other agri plays that would be better and have less than 5% exposure in such companies. So this was my video on Shakti Pump. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.